This is Terry from Lite FM, and we are speaking again to one of our favorite guests, Mr. Lim Eng Ping. Now, Eng Ping is the head of Wealth Management Malaysia under Maybank's Group Wealth Management business in the Community Financial Services sector of Malaysia. In his role, Eng Ping is responsible for managing the three wealth segments, namely Maybank Private, Maybank Premier, and Maybank Privilege, as well as Islamic Wealth Management. Now, Eng Ping has grown Maybank's assets under management over the years, and we sit down with him today to talk all things wealth and what it means for our listeners. Eng Ping, you ready for this?
Yes, Happy New Year, Terry.
Happy New Year.
Good to be back here.
Yes, with another new year on the way.
Yes.
In our previous conversations, we had the pleasure of speaking with you as the head of Wealth Management Malaysia at Maybank. You provided valuable insights into wealth management and how Maybank helps clients achieve their wealth goals, right? Now today, we delve into key investment trends as we kick off 2025. What's ahead and what to look out for. We're going to talk about all things wealth with Eng Ping. In the last episode, we touched briefly on investment trends and key themes to look out for this year. So for our listeners who invest in stocks, what would you tell them?
The potential for big market gains might be limited given the high starting point, as we all witnessed a very good year in 2024. Still, a soft landing could support stocks, which may drive decent returns for this year. I always say that it is wise for investors to stay cautious and focus on protecting their downside risk.
Right.
Yeah. The US economy is holding up with consumer spending staying strong thanks to a healthy job market. Plus, we expect better earnings growth this year, especially if the US corporate tax rate is reduced to 15% as Trump promised. We would recommend investors to focus on mega cap tech and high quality stocks as interest rate swings might persist. Tech firms are likely to benefit from the ongoing demand for AI,
right.
And banks could thrive on the resilient US growth with the sort of manageable credit risk. Back in 2024, the wild card, a Trump election victory happened and ushered in a more uncertain world. This year, our first wild card, right, would be what would Trump do, right, in terms of targeting specific countries to implement his policies?
That question is on everyone's mind.
That's right. This is why we always remind investors to protect their downside risk by diversifying their investment allocation across geographical and sectorial exposures. While a diversified portfolio may deliver a lower return than a concentrated portfolio in the short term, it could lead to better risk-adjusted returns over a longer period of time. Hence, we advocate investors to sort of maintain a core diversified portfolio to optimize returns over time.
Very nice. Now, any investors tuning in today will probably also wonder about bonds, not just stocks, right? What's your take on bonds as an investment?
This year, the US Federal Reserve easing cycle is expected to support bonds, with rate cuts being the main driver of return, right, to bonds. Locally, in contrast, B&M is unlikely to adjust the overnight policy rates, or commonly known as OPR, maintaining the current rate as inflation, the labour market, and economic growth remain healthy. In developed markets, we see opportunities in European and Australian banks alongside selected European life insurers. Locally, we favour investment-grade sukuk on the back of a very stable fixed income outlook. Emerging markets also present attractive prospects,
right,
particularly in Indonesia's consumer and property sector and India's steel and communication sectors. To build resilience or portfolio resilience, we encourage investors to focus on quality investment-grade bonds for stable income. For those seeking higher yields or higher returns,
yes, please.
We do see opportunities, but emphasize that the importance of selecting quality names with strong credit quality to mitigate risk.
The moment you said for those seeking higher returns, it's like all the ears perked up, I'm sure, right? Now, last but not least, what's the outlook for major currencies? I definitely want to know how our Malaysian ringgit in particular will do as well.
The US dollar may remain supported, right, for longer in 2025 on the back of Trump's pro-growth policies, which are largely inflationary. This may set the US Federal Reserve on a sort of a shallower monetary easing path, providing support to the US dollar. Coming to ringgit, while potential tariff may weigh on our currency, I think other factors such as effective fiscal consolidation as well as investment upcycle that we're seeing across the economy can provide support to the ringgit. At the same time, not forgetting China, being one of our largest trading partners, plays an important role in our currency outlook. From a trajectory-wise, we expect the ringgit weakness to peak in the first half of this year,
Right.
before our currency regains strength in the second half of this year. Within the Asian region, the Singapore dollar is likely to stay strong despite trade worries over Trump's policies, right? As Singapore's bilateral trade deficit with the US may keep it off the administration's radar. Against our local currency, the Sing dollar strength may waver in the second half of the year, as we expect the tension between the US and China will pass by then. Besides the Sing dollar, we prefer the Indonesian rupiah,
Okay.
over the Thai baht and the Philippines peso. As Indonesia is a less trade-dependent country, right, from economic point of view. For investors that have interest in euro beyond Asia, the euro may decline based on two potential major factors. Right. Firstly, if Trump imposes tariffs on Europe's large trade surplus, right, with the US, and second, due to the political uncertainties that we're seeing in Germany and France affecting their growth. Plus, the ECB may also cut rates more aggressively, further weakening the euro. The British pound, on the other hand, may have a better advantage as compared to the euro. This is in view of UK's smaller trade surplus and resilient service economy, which could shield it from a similar impact. Geopolitical uncertainty will persist in 2025. Trade tensions may accelerate, move to reduce reliance on the US dollar, but it will likely remain the dominant currency. So in this environment of volatility, safe haven assets, including the US dollar, are expected to gain more support.
That is so much to consider. Like, I know while I'm supposed to be able to make some decisions based on what you've suggested, one more decision I'm trying to figure out as you're speaking about all of these variables is, where do I travel to this year? Like, how do I plan my holidays around what you've just said as well, Thank you so much for joining us again, Mr. Lim Eng Ping, with me, Terry.
Thank you, Terry.